Welcome to Finding Certainty with your host and U.S. Army veteran, Patrick Laing. Over the next hour, you'll learn from Patrick and his expert guests how to attract more certainty into your business and your life. Now, here is your host, Patrick Laing.
Welcome back, everyone, to our next episode of Finding Certainty. I'm your host, Patrick Laing, and I'm very pleased to have with us my very special guest, Mr. Don Oberle. You're in for a real treat today, since Don is considered by many to be the number one expert in his field. We're going to be talking about credit forensics, as he calls it, credit restoration, credit coaching. So, Don, really looking forward to our conversation. Thanks for being with me today.
Thanks for having me, Patrick. I'm excited to be here today.
My pleasure. So, as you've seen, if you've seen the title of our show, we're going to be talking about what we call credit forensics and go into some details about Don and his career. Don is the CEO of a company called Credit IQ. Now, are you CEO and chairman of the board, or both?
Yeah, I do both. I take out the trash, and
you wear a lot of hats,
everything.
Like most business owners, right? So, Credit IQ has been in business for 32 years now. Don is a national public speaker. He has trained hundreds of thousands of consumers, about 125,000 real estate agents. Very respected in his field. We're really honored to have you with us. So, 32 years in business is nothing to sneeze at. I know your corporate headquarters is up in San Francisco Bay, and your team are really known as all-in-one financial experts. Is that the best way to describe them?
That's a pretty good way to explain it. We do a lot.
Okay. I know you offer a number of services. We're going to get into what Don and his team do, because it's really quite extraordinary. I mean, you offer credit restoration, credit coaching, financial coaching, debt settlement, credit monitoring, right? Business coaching. The list goes on and on. We get into investment coaching and real estate coaching and mortgages and so forth. I mean, big breath, right? But starting out, tell us a little bit about yourself. You didn't start out in finance or credit. So where did you grow up, and kind of how did you land where you are today?
Well, like a lot of teenagers and people in their early 20s, we don't know what our passion and purpose in life is yet. But so I was a bit of an artist when I was a kid. And, I won state nationals in Indiana for acrylic, painting. And so then I started, drawing and rockets and airplanes and the schematics. And, I was really into it. And so my parents were like, aerospace. So let's send them to aerospace school. So I came home one day from high school, and there's a gentleman sitting in our living room. Like, who is this? And like, this is, the gentleman from Spartan Aerospace. And so they recruited me, and then moved from Fort Wayne, Indiana to Tulsa, Oklahoma. It was the number 2 aerospace school in the nation at the time. And about halfway through college, I'm sitting behind a CAD designing rockets and airplanes. That was, I didn't see that was my passion and purpose, but I didn't know what it was yet in life. But so I called up my family and said, I don't think I want to do this. And they said, well, just finish what you started. That's old Midwestern upbringing, I think. And so I finished it, got my degree, and moved back home to Indiana, where I grew up. And I sent out my first resume to Lincoln National Bank, which is they do life insurance and mortgage banking and lending. They're one of the largest in the nation at the time. And then I got my Series 6 and Series 7, got involved in investing. And then about 8 months later, I got involved in commercial real estate lending with the bank. And then as soon after, I jumped into residential mortgage banking. And I started seeing people with issues on their credit report. And, and so I said, I wonder what my credit looks like. So I pulled it up, and there was a collection for $100 on there from a utility bill. When I moved from Tulsa back home to Fort Wayne, I put a forwarding address in, but the utility bill didn't follow. And I didn't know the bill existed. So I called them up, said, hey, I want to take care of this. I said, great, send us a check. And I did. And 3 weeks later, I called them back and said, now, when are you going to remove this off my credit report? And they said, we're not going to. And I said, what do you mean? I just paid it. And like, well, the law says, the FCRA says, and I didn't know what that meant at the time. It says it stays on, a paid collection stays on for 7 more years as a paid bad debt. And I'm like, well, that's not very fair. So you've heard that old saying, it's not rocket science, Pat?
Right.
Yeah. Well, it was for me because I had to use my engineering background to experiment with the credit bureaus because credit repair didn't exist back then. This is like 34 years ago. And so I used my engineering background to experiment with the credit bureaus to figure out how to remove that paid collection. And within 6 months, I was able to remove the paid collection 6.5 years early. Okay. And so a light bulb went off. I'm like, okay, I understand investing. I understand lending. I understand real estate. And now I understand credit. And then I did research and I found out per capita, the Bay Area and San Francisco had the most mortgage bankers in the entire nation. So I moved out to San Francisco Bay Area and founded the nation's first credit restoration company. So so that's how I got started in the business. So a little bit of background there.
That is awesome. It's interesting because it's as I said, it's a big deal to be in business 32 years, and most of us we look at our careers and they take this path of we kind of end up a lot of the times where we didn't expect to end up, right? But whatever we do, we have a wide variety of experience, and we use that life experience, right? You use I know for a fact your business, you view it in many respects like an engineer, right?
Yes.
That's where you started, and much of what we're going to talk about today has evolved because of that engineer mindset, that engineer outlook, and approach to things, right? So I think that happens a lot in our businesses. I've been in sales for 30 years, but I ended up owning a business, owning a cost reduction firm. We help nonprofits raise funding, but all of it has evolved out of me being in a sales role for most of my life for a variety of different companies and seeing this need for things to be done differently, a need for having an altruistic look, wanting to do social good, wanting to do more than just make an income, but make a difference. All of this has evolved into what our business is today. But it was from being on the other side of the fence, right? It was being in the trenches and wishing things were different more often than not.
Yeah. I mean, Patrick, it's without, to me, without my passion and purpose, and what am I doing in the world, right? And I quickly 28 years ago realized that I'm either working in the business or working on the business. And that's where a lot of entrepreneurs I see that we coach as well kind of go wrong. They want to stay stuck in the working in the business, and then then no one's steering the ship truly. Right. And the vision's not able to flourish,
So what gets you?
Because nobody wants a job, right?
You're exactly right. I mean, 4 million people, over 4 million people quit their jobs just in December, looking to start new businesses, looking for new opportunities. It's a statistic I recently heard. But so what gets you up in the morning? I mean, in other words, what are you most excited about these days?
Well, it ties into just what I just said, is the passion and purpose. Because like I said, nobody wants a job because they're just in the grind, and you're a squirrel or a hamster in the wheel. I mean, that's not living, for most people, to keep them going long term, right? So, for example, if you talk with most doctors and you ask them what called you to be a doctor, it's usually, in most cases, the ones that are passionate and good about, they're great at what they do. It's because maybe a relative had been sick or what have you, and that drives them, right? So I find often the entrepreneurs that have long-term success and stay with it long-term are the ones that harness that drive on why do they do what they do. And without that, that's why most businesses fail, in my opinion, because, it takes that drive and you got to harness it from somewhere. Right?
I completely agree.
Yeah.
It's hard. It's a lot of work.
So that's what gets me up in the morning. I just know that to be vulnerable here, my first waking thoughts are, I give God my first fruit and I say, what do you want me to do today? Who do you want me to pray for? Who do you want me to serve? And I let that lead me. And, life has gotten a lot easier the last 15 years once I started realizing that spirituality component of it.
Right. I'm glad you brought that up. I used to set New Year's resolutions every year, and like many of us, they wouldn't last very long. And I finally, about 5 years ago, made a goal to do one thing, have one goal every year, and that was to follow the spirit in everything I do, to follow those
Yes.
impressions and follow those insights, and really
Hmm.
just follow where God wanted me to go, right? And everything has gone better since I adopted that course. So
It makes it so much easier, doesn't it? It's like, because I
yeah,
can't know everything, but he does.
it really does,
You
right? If you
know,
can,
whenever
yeah,
I do it on my own 2 feet, my own will, then it's like it usually ends up not so great. So
right. It's if you can learn to listen and recognize and then act, you can just do amazing things. So
that's right.
so I always start out the show. I appreciate the backstory a little bit because
Sure.
it does make us who we are. But I always start out the show with really explaining why I invited you to be a guest on the show, and there's really two main reasons in your case. First and foremost, there's a need for what you do. I mean, we have. I always like to bring on the best if I can in their field. And that's definitely you. I mean, you're the foremost expert in this area nationwide.
Thank you.
Credit touches all we do. I mean, it affects our lending rates, our buying power, our insurance rates, access to equipment, factoring. I mean, the list goes on and on. It
Hmm.
impacts almost every aspect of our lives. And yet most of us don't understand it. We're not utilizing it well. And most of us just, we need help, right?
Hmm.
Secondly, there is a need for legitimate sources for help because there are a lot of shysters out there. There's a lot
Yep.
of illegitimate offers. And I think a lot of people out there know they could use some help with their credit, even if they're strong. They either want to keep their score good or they're wanting to get it to that point, but they don't know where to turn, right?
Hmm.
There's 101 credit repair and tax recovery and these other types of ads. And people are like, well, where do I start? And how do I know who to trust? And so that's why you're here. I mean, because I know from experience, from long experience, that you are one of those sources. So I've heard you talk, and this is my first question for you. I've heard you talk about how we are at the mercy of the industry. Our whole show is about empowering our business owners and our nonprofits. It's about helping them navigate this business world better. And you help people every day navigate credit, finance, and investing, and really taking back control of their credit and their finances. But what do you mean by we're at the mercy of the industry, if I may?
Well, to go a little deeper, it's a great question. You know, God gave us ears to hear and eyes to see, and everybody that's listening, the sound of my voice, knows something is very wrong with our education system. Okay, so it starts there, and if you understand the core of, and I'm doing this on purpose, folks, to make you a little mad, so you dig down deep and take a different path here today, is it that the education system doesn't even cover what we really, practical, what we need to know in day-to-day life on how to manage your finances and credit and stuff like that, for a reason. Because if you think about it, there's more money with the banks, insurance companies, et cetera. There's more higher profits for them with the lower credit score. So because the lower your score is, the higher the rate, the more money they make, right? So the system's kind of stacked against us. So the mercy part is, just realizing that the system's stacked against us in most cases. But you have it's up to you to get a little angry enough to find out, to get that education. Where are we going to get it? Well, I'm not going to pitch my company, but we can provide the education that you won't see on the internet. You won't find on Credit Karma or MyFICO, on the algorithms and the formulas, and just the data that we've compiled over the last 32 years is pretty incredible, that you just won't find on the net. But the mercy part with the lenders, insurance companies, this is one of my favorite quotes: "What I don't understand, I fear, and what I fear, I push away." Do you guys relate to that? Okay.
Right.
So, and what percentage of fear actually comes true? Like, I don't know, 0.001. I mean, very little of it, right? And so, just passing through that fear, start learning how the system really works, and then what to do and what not to do, and then applying those techniques. They're very simple techniques. I know Pat's going to talk about a special offering at the end of the recording today that he's done for you listeners. I just think that if you can get through some coaching from a reliable source on how the system really works, it's not as complicated as you would think, and things can be turned around very quickly. I don't know if I answered your question there, Pat, but
that was great. I think of the quote that the definition of insanity, right? As we keep doing the same thing and expecting a different response or a different outcome. And it's really a travesty because we talk about this, how there's kids go through school and they don't even get taught how to do a budget, right? They don't get taught what a credit score is, how to protect it, the danger of credit cards. I mean, et cetera, et cetera. It's almost kind of like the travesty that is cancer research, right? The pharmacy companies and others that are making billions of dollars off of their medications and off of different what is it when somebody's on cancer, when they have cancer, they're going through chemo, right? They're not motivated to find a cure for cancer because then those things would disappear. So it's a really interesting insight. I never thought about that with regards to credit. So,
well, I'll give you a quick story. So I have some political friends, senators, congressmen, stuff like that. And about 15 years ago, I approached them and said, let's push this education out. In fact, I'll give this away free, our coaching stuff for free to the Department of Education for free, no charge. I'm not trying to make money. I just see the need. There's too many people are in the muck and the mire. And it saddens me every time I hear everybody has a story, including me. I've been through the fire, right. And finally, my buddies were telling me, look, we see your heart, and they're pretty high up in Congress, right? And they're like, it's just not going to work. And then that's when they enlightened me how the system's really stacked, what I just shared with you a moment ago about the Department of Education, right? So they didn't even want it for free, right? Wow. Just this knowledge, right? To put in high schools. Because if you can catch the kids in high school, not college, but high school, right? If you catch them then and wire that synaptic pathway, their brain early, then you're going to see a different result, in the nation's health,
right?
Because your finances, debt is bondage and slavery. It really is, no matter how you spin it, right?
Right.
So, if you can get out of that debt mentality into a wealth creation mentality, there's lots of gurus, Robert Kiyosaki, who I've spoken with before, and so anyway, so I don't want to go on a diatribe there, but
Well, I think it's really our responsibility as business owners, as speakers, as trainers, and most importantly, as parents, right, to help educate our children on these things. Since it's not being taught in the schools, there's not a motivation to do it out there from the lenders, from the industry. Really our responsibility to try to help. And we need to learn from you, some people like you, so we can go ahead and share that information. So I want to get into what it is Credit IQ does as well, but we're up against our first break. So we'll come back. We're going to talk a little bit about credit monitoring, the difference between the different credit sources out there, credit report sources. Want to get into credit formulas, and then break down your process. Because I know that's the first step is pull a credit report. Let's see where you're at. And then your team does a whole gamut of services and support that is really quite extraordinary. I've been through it myself. And so I speak from first experience. So from personal experience. So we've been talking with Don Oberle about his distinguished career in credit forensics, credit restoration, financial coaching and consulting. We're going to take a short break. When we get back, we'll be continuing the conversation about how his process works. So thanks for being here, Don. We'll be back with y'all shortly. Don't go away. The best is yet to come.
Certainty Management can help create more certainty in your life with our deep discount health insurance options, even for 1099s, part-time employees, volunteers, and more. Pay less to protect yourself, your loved ones, and your team. Call 888-684-3122 for a free quote today. That's 888-684-3122. Visit us on the web at certaintyteam.com. That's certainty, TEAM, like Mary.com.
If you're a nonprofit in need of funding, we can help. Certainty Management is a cost reduction firm that also helps churches, schools, sports teams, and other nonprofits raise unlimited zero-cost funding. Best of all, you don't have to sell anything or ask for donations. Call 888-684-3122 to learn more today. That's 888-684-3122. Visit us on the web at CertaintyTeam.com. That's Certainty, TEAM, like Mary.com.
Voice America Business Network, the bottom line in business.
You're listening to Finding Certainty with Patrick Laing. Have a question for Patrick or his guests? Join us on the show at 866-472-5790. That's 866-472-5790. Now, back to the show with Patrick.
And we're back. We're speaking with Don Oberle, CEO of Credit IQ, about he and his team of all-in-one financial experts help their clients take control of their credit and make better financial, real estate, investing, and business decisions. So thanks again for being with us, Don.
Yeah, happy to be here, Pat.
I am really enjoying our conversation. Just before the break, we're starting to get into your process. I know the first thing is you pull a credit report, but can you talk just for a minute about the difference between Credit Karma and Credit IQ? I mean, because there's a pretty big void between what you do and provide and what they do, right?
Yes, yeah. So the number one thing that we hear from, because we work with clients that are doing, $20,000 a year, and the average client's doing about $150,000 a year. We have a segment of maybe 7% of our clients are doing, several million a year, right? And everybody across the spectrum, no matter what the income bracket is, one of the number one things that we often hear is, what do you mean this 700 score I got from my credit card company or Credit Karma, or even from the credit bureaus? This is a credit bureau report from Experian. What do you mean it's not my real score? Like, sorry to break it to you, those are what's called simulated scores. It's how they think they work, right? The only true way you'll ever see your real lender score is if you have a lender pull it, a bank, right? And so that's the only, because it's expensive. It's like $50, to get all three bureaus with the real scores. So whenever I hear the person, I got a free report, I'll stop right there. If it's free, it definitely isn't real, for sure. It's the simulated scores, how they think they work, right? So the first step is to find out what is your real lender scores, right? So you got to be able to access a real lender's report, which we can, if you are interested in getting a copy one, there'll be a description down below in the link here. You can click on it and schedule some time to get one. But find out what the real score is, and then we do a forensic audit on in a web meeting and look at the report together on you and your significant other. And by the way, if you're married or, but you have a significant other, you definitely want to get both of them at the same time, because, wealth creation is leveraging both incomes. I'll give you a quick example. Let's say your income's high enough to buy a single family home, and you really don't need your significant other's income to qualify for it. Well, why would you put them on the loan, right? Keep them off the loan and then put it just under your name for the home loan, and then go buy a second home and then under their name. And now you got two properties going up in value, right? So that's one tip of the day, wealth creation. You get two properties going up in value. And then, so it's good to look at both yours and your significant other's report at the same time together as a family too. That way there's synergy, right? And then look at where your weaknesses are and where your strengths are, and identify with that, and then and then getting professional advice on how to handle these accounts. I'll give you an example. If you haven't used a credit card for more than 6 months with a zero balance, right, and there's no activity at all on the 6-month mark, it starts to drop your credit score. That's a big aha moment. Like, what? So what we train people to do is take all your credit cards out of your wallet, wrap up in a rubber band, put them in a safe somewhere, go to your calendar, do a reoccurring alarm to alarm you every 5 months for the rest of your life. On that 5th month, when the alarm goes off, you go to the safe, you grab all the credit cards at one time, keep them on the same cycle. Go buy a cup of coffee, literally $5 on each one. That's it. Because the closer to zero you are, the higher the score will be. And then once you've done the $5 on each card, put them back in the safe. When you get the statement in the mail, wait until you get the statement, because if you paid off before you get the statement, it may go idle and looks like you didn't use it and drop your score in the 6 month. When you get the statement in the mail, then you pay it to zero that day. Okay. And then, by doing that, by going through your report and looking for those cards you haven't been using for 6 months or plus, that could give you 5 or 10 points on each card. So if you've got 5 or 6 cards, that could be 50, 60 points, right? So that's just one of 3 hours of knowledge that we give the average coaching session.
Right. I've seen on your website, you talk about gaining a Harvard degree in credit in about 3 hours, right?
Yes. It's 3 hours long, and we'll use every bit of that time. You're like, what can they teach me? I know a lot about finances. Like, well, we have mortgage bankers that have been in business for 50 years that tell us often, well, I didn't know half of this stuff. Right. This makes sense now. Because once again, we're approaching it from an engineering standpoint, not what the, so to be, mercy of the credit bureaus and the lenders are propagating. You're like, good example, urban myth. How many times have you heard, hey, I was told I was supposed to keep a balance on my credit card, to help keep my score up? Well, yes and no. I mean, who do you think started that propaganda? The credit card companies. So a zero balance on the credit report on a revolving account, you gain more points than having a balance, let's say 10, 20, 30, 50%, right? And you always want to keep those below 30%. So I don't want to go too deep into the sauce, but
as long as you
kind of give you an idea of what you don't know can hurt you, Right.
As long as you pay it off before that 6 month hits, right? And keep that zero or
good point, Patrick. So you want to pay it. You don't really want to carry that balance.
No, I know.
From a wealth creation standpoint, is if I'm throwing away $100 a month in interest, I mean, that could go towards buying some more real estate, right? So
exactly.
Yeah, I know what you meant, though.
Yeah, I went through this process some time ago. I worked in the solar industry for some time, and
you were a great student.
Well, we saw
everything I've asked you to do.
We saw many clients who wanted to invest in our product, but they ended up being turned down. And so we would refer them to Don and his team. He would go to work on their scores, get their scores back up, so we could help them invest in their home. And so I said, I want to go through the service, through the process with you myself, so I can learn from it. I've got things I can learn. In fact, every time we talk, it seems, Don, I learn something new. But I want to get into credit formulas and some of those things, but I think we should do a whole nother show on that, because it's
a whole show
itself. And I mean, we do multiple shows over the next few months, and really help educate people on this topic, because it's so important. But once we do the credit report, though, and you do this forensic analysis, I mean, it's absolutely essential we have good data, because how can we know where we're going? How can we know how to get there if we don't know where we're starting, right?
That's right.
That's why this is so important. Tell us more about the process from that first appointment. Once you've done that analysis, what do you do next? I know you've talked about a 5-year plan and so forth.
Yes. Yeah, we put together a written, because my favorite saying, if it's not written down, it doesn't exist.
Right.
Right. Especially good for visual kinesthetics, right? Those people, which is what I am. And so we map out, these are things of what a financial planner or financial advisor should be doing, but most of them are too lazy to do it. They just want to say, hey, how much money you got to invest in 401k, Roth IRA, whatever investment vehicles, and you go figure out on your own how you're going to create the money so you can invest it, right? That's the mentality of most financial advisors, where we take that serious as part of as pretty the main part of our push for wealth creation. And accomplishing a 5-year goal set plan with a client. And then we help them in that meeting. We help you decide what comes first, the chicken or the egg. Like, hey, I want to build, because the fastest way to create wealth in most cases is through real estate, right? In most cases.
Right.
So whenever we hear, well, like, yeah, I need a new car and I want to buy a house. Like, well, let's put the house number 1 car the day after we close escrow, car number 2, because, the house is going to make you money and the car is not, right? And so, and your tax write-offs and stuff like that. So we help rearrange the order, the chicken or the egg, and then we build a roadmap, we put it in writing, and that's our living document, right? And then ongoing coaching as an accountability partner, checking in with each other on the path to creation is really where we shine through. And then once we have that in place and we see what the goals are, the carrot, so to speak, because we all have to have motivation. Then if a client happens to need us to fix something on the credit report, if there's something we can teach the client for free, we'll do it. Because our attitude is when you give, God gives tenfold back. It's just that simple math. Unfortunately, not everybody gets that. But
Right.
so if the client says, well, I really don't want to do that stuff, I'd rather have you guys do it. Well, fine, we'll do it. Right. Whatever it takes.
Right.
And then we start down the path of working on cleaning up the credit, and whether it's bankruptcies, foreclosures, short sales, whatever, it doesn't matter. And we do then what's called forensics. And so there's without going too deep into it, because we are short on time today, there's 38 questions that you can ask a creditor, right? And so, but you're only allowed to ask one question at a time. So the trick is knowing what question to, like, for example, I may ask a different question with a Victoria's Secret than I do Chase Bank, right? Or Bank of America Mortgage, and so on and so forth, or the bankruptcy court. So we've built that system over time, and legally, we're allowed to do that. Ask them to verify data within the account. That's the law. Simple, right? And if it's obsolete or they can't verify it, what have you, it's erroneous, then the law says they got to remove it within, 30 business days, right? So Then what we do is we pull a new lender's report. It's a soft pull. That way it won't drop the credit score. So you always want to make sure people are pulling soft pulls, by the way.
Right.
Because then it won't drop the score. And then we get to see before and after, what was the original score, what is it now, and what's left, if anything. And then we just keep repeating it, rinse, repeat, wash, just keep doing it every 90 days, right?
Right.
So, and eventually we win. That's why I call it forensics. It's persistency, right? And which ties into what my dad taught me is there's 3 pillars in life: is faith, family, friends. And then I took that on a business level and went, okay, relationships, systems, and consistency. Right? As a successful business owner, you need to be doing that. Relationships, keeping them high and tight. Systems, maybe you're using a CRM that's high and tight. You got to have that. And then being consistent every time with your clients. It's the Michael Gerber E-Myth theory, right?
Right.
So
a great comment. I think all of our listeners out there, if they're business owners, if they're nonprofits, I believe that the only difference between a for-profit and nonprofit is the word non. I mean, they're both paying bills. They both have insurance. They're both worrying about credit and lending and brand and everything, right? But
yes,
but that is fantastic advice for anyone who's listening about relationships, systems, and consistency, because without those, you're not going to stay in business. You just won't. You're going to struggle. If you do, you're never going to succeed. You're going to be struggling the entire time and just limping along. But I know part of your process, besides the credit forensic analysis and then this 5-year plan, and it is tailored to every customer. It's not a cookie cutter plan.
No, it's very
different
tailored
for every customer. It's different
everybody,
for individuals and businesses and so forth, which we're going to be talking about in our next segment, but after the break. But I know part of it is also you bring in other professionals. If they need a CPA, if they need a bankruptcy attorney, they need a financial planner. I've been introduced to people by you that you've gained this extraordinary network of professionals over the last 32 years. And you're the first to admit that you're not as much as you guys do, you don't do everything, right?
Well, one of my favorite sayings is that, most attorneys are paid to create conflict. They're not paid to create solutions. Would you agree with that? That's where the bill goes up, right? So it took us years and years and years to interview the right attorneys that are CPAs and tax attorneys, right? So now there's a difference between a tax attorney and a CPA. To me, what I've learned over the years is that a tax attorney may be a little bit more, right? But here's the line. And so a CPA may be 10 feet away from the line, where a tax attorney knows where the line is and he'll dance on top of it, but he won't cross it, which means that's more money in your pocket for your tax returns and what have you. Does it make sense?
Right.
So so we've done extensive interviewing, and our CPA was attorney. He's been with us for 15 years now. and he handles clients nationally. So whenever we see a need in the forensic analysis of their financials, that 5-year plan, one of the questions is, are you current on your taxes? If they say no, then do you have a CPA who's a tax attorney at 11 Trust? If the answer is no, say, well, we're going to help you with that, right? And so we'll get them connected with him. So, and that's if you're filing, and he can handle your corporate taxes and your personal taxes, right?
Right.
If the credit, let's say let's say a client comes in, they want to do a business loan, right? Because we have like 30% of our clients are business owners. They want to do a business loan, or they want to do a home loan or whatever. And we're looking at the financials, and let's say we're making 150 grand pre-COVID. Now they're making 50, and they have, their taxes are messed up. Haven't filed them in a couple of years. Did you know, Patrick, you can put tax liens into bankruptcy in most cases, not all, but most.
I did not.
Most people don't know that, right? Now you know. So a lot of people are walking around life going, yeah, I'm never going to be buying this commercial building or this home or this business loan because of my tax problem. Well, that's not true. So if someone's in really bad shape and we look at their financials and say, it's going to be easier and faster and cheaper for you to have us file a Chapter 7 bankruptcy, because we have a bankruptcy division too. So if we file a Chapter 7, wipe out all the taxes, wipe out all the bad debt, hit the reset button, teach you how to rebuild the credit file quickly. Within 2 years, we'll have them back up to 700 plus, as long as there's no more boo-boos, and they can go FHA or VA all day, all night, right?
Right.
So there's so much that we can help with on the knowledge on the legal side as well, bankruptcy and tax law as well.
Right.
Yeah.
And I know you can get it done for a fraction of the price too.
Much cheaper. Yes. We have paralegals that can help file bankruptcy for $300. I mean, it's like,
right. It's crazy.
The average bankruptcy attorney is $2,000.
Yeah.
For Chapter 7.
Paralegals are doing all the work, right?
And they're paralegal. Yeah. So why not just go right? So we have a great paralegal that can handle that for $300.
Yeah, that's amazing.
Yep.
So we're coming up on the next break. I know the question most people have on their mind when they're dealing with credit, or maybe their credit score is lower than they want, is how do I get it up? So I want to address that when we come back. Just take 2 or 3 minutes and maybe share some tips with us for how to increase our credit score. And then we're going to open it up to the audience, see if anyone wants to call in, and talk about some of the other things we could be doing better. I know some of the biggest mistakes many of us are making in today's economy. Looking forward to hearing that from you as well, Don. So,
hey, Patrick.
We're speaking with Don Oberle, who's the CEO of Credit IQ. Hopefully you're gaining some good insights into this cumbersome world, this unwieldy world of credit and financial management. It's an ongoing process. I continue to learn every time I speak with Don. And if we're not learning, we're stuck, right? We're either stuck in the same place or we're actually moving backwards more often than not. And so really appreciate you being here, Don. We'll come back after this quick break. Don't go away. We've got lots more to come. Thanks, everybody.
If you're a nonprofit in need of funding, we can help. Certainty Management is a cost reduction firm that also helps churches, schools, sports teams, and other nonprofits raise unlimited zero-cost funding. Best of all, you don't have to sell anything or ask for donations. Call 888-684-3122 to learn more today. That's 888-684-3122. Visit us on the web at CertaintyTeam.com. That's Certainty, T-E-A-M, like Mary.com.
Certainty Management can help create more certainty in your life with our deep discount health insurance options, even for 1099s, part-time employees, volunteers, and more. Pay less to protect yourself, your loved ones, and your team. Call 888-684-3122 for a free quote today. That's 888-684-3122. Visit us on the web at CertaintyTeam.com. That's Certainty, T-E-A-M, like Mary.com.
When it comes to business, you'll find the experts here. Voice America Business Network.
You're listening to Finding Certainty with Patrick Laing. Have a question for Patrick or his guests? Join us on the show at 866-472-5790. That's 866-472-5790. Now, back to the show with Patrick.
And we're back again. We're speaking with Don Oberle of Credit IQ, sharing some of his insights from 32 years in business, helping people take back control of their credit and their finances. So thanks again for being here, Don. Real quick, just if you had to give maybe 2 or 3 points for how to help increase someone's credit score, take about 30 seconds on each one. We're running short on time here. I know we have a caller who has a question, but if you had to give 2 or 3 points, what would those be?
The number one that we covered earlier, find out where you're at today with the real lender score and real lender data. But the first tip would be, after that's done, is so we have a starting reference, is the credit card debt is the most impactful part of the formula. Especially right now in this economy, I'm seeing. And so paying all your credit cards down to zero as quickly as possible. And then if you really want to maximize it, just charge $5 every 5 months on them to keep them alive. That's
right.
Number one, right? If you're having a hard time, say, I just can't pay it all down to zero right away. Well, then start with the higher interest rate cards with the higher balances. Pay them all down sequentially down to below 30%. So if it's a $100 limit, pay it down below $30. Make sense?
Right.
So bring them all down below 30%, right? And then once they're all down below 30%, then you start paying them down to zero. So phase 1, phase 2. That's number one trick. And the other trick is that let's remove any derogatory data that happens to be on the file. That's also a very big part of the formula.
Right. And it could be a whole nother show about how you do that, because I know you work directly with the credit bureaus. You upload things electronically. You're not writing letters like they used to, or like many still do, which is so slow and so laborious and so cumbersome. I think what you do with both on the front end with the credit forensics, on the back end with your process for correcting those mistakes on the credit reports is really extraordinary. No, I don't know of anyone else out there that's doing what you do in the way that you do it, right?
No.
They just don't exist, right?
No, it's because it's a lot harder work. And then most people, I hate to say it, in that industry they have a different mindset. Yeah, okay, you said it for me. Thank you.
I know it's true. So we do have,
like my dad said, work hard and you pay your bills on time and life will be okay.
That's right. And if you don't, if you run into trouble, which we all have, we've all had.
Yes, we've all gone through fires.
Reach out to Don.
Yeah. Oh, one other tidbit. If you don't have at least 3 active, open, good revolving accounts, store card or credit card, that are active, open, and current, greater than 12 months old, it's very hard to get up in the high 700s. Very hard. So if you only got 1 or 2 cards, you need to get 1 more, right?
Right.
You need 3. And then once they hit 12 months or older, you get a super boost in the score. I mean, that's how you get in the high 7s. Because once you break 740, you can demand a 0% rate on a new car loan. You can demand 9.9 fixed rates on credit cards. You can demand cheaper car and home insurance premiums. And of course, you can get par pricing on real estate loans.
Right.
Which
and par,
maybe you probably don't even know what par means. But
that's a whole other conversation as well. We definitely got to do more episodes.
Okay.
We're just nibbling around the edges of this huge morass that is credit. So I know we have a caller, Frank Hellring. He's actually one of the hosts here on Voice America who's been in on our show. So Frank, are you there, my friend? Do you can you hear us?
Hey, greetings, Pat. Congratulations on your now 3rd show, and you got a fabulous guest and Don on today, that's for sure.
No, absolutely. Do you have a quick question? I'm grateful you're here. I mean, your show is all about empowering small business as well. So, thanks for calling in. Do you have a quick question for Don? We're coming up on our
real quick, Don. First of all, it's amazing how God works in threes, and you said we need 3 revolving credit accounts. That's amazing. But not to put your feet to the fire, but my whole world on my show is small business. small business has been hammered during this pandemic. They're on the comeback, but the capital markets are drying up. They are fraught with EIDL payments to SBA, and obviously they invaded their pension assets like nobody's business. So I would like to kind of get an idea of what your view is of the State of the Union with the small business community and the credit markets.
Well, generally speaking, because this is definitely your wheelhouse, my experience is that if you really want to get a small business loan, most traditional banks are looking for minimum 700, preferably 720 or higher on the lender score, not the Credit Karma fake scores. So to get their house in order, to make sure that that's coming in strong, preferably minimum 720, what most the A paper banks are looking for. Would you concur with that, Frank?
I would, and quite frankly, I'll tell you what. In honor of the time that Pat has left on the show, I'd love to think about having you as a guest on my show, Don, because I really haven't covered this credit aspect. And let me tell you something: small business needs this yesterday.
Yes, I agree.
They do.
I'm seeing a huge spike in that, Frank, over the last 120 days.
Yeah,
I would. I'll look forward to having you on, Pat. You have a great rest of the show. Thanks very much. Right. Bye bye.
Thanks, Frank. Sorry, I was just going to say I would love to see you guys dig into the differences between individual and business credit, and talk about what that par score means. Because when you do have a par credit score, what is it, 740 or 760? It opens up all kinds of doors that you didn't even know existed. Right.
Right. Yeah. So, and that's a 760 lender score, not those fake simulated scores we talked about. Score. Right. Yeah.
So. I don't know that we even have time to go into the mistakes we're making, but is there one that stands out in today's economy, one mistake that we're making in our finances or in our credit? What I love about you, Don, and let me just qualify it, is that you don't just give people a fish, right? You teach them how to fish.
Very important,
because that education piece of it is so essential. We're all making mistakes. We don't even realize it, right? We don't even understand. And so maybe talk about one mistake we're making, and then I'll let you wrap up with your thoughts on teaching people how to fish.
Sure. Well, the number one mistake I'm seeing people make is it keeps going back to starting at the beginning with looking at a real certified lender's report, right? Because if you're flying, 50,000 feet and you don't have your radar on, and you're just going off of what the map tells you on the piece of paper, you're going to run into something, right? So, so if you think you're starting at 700, but you're really at 600, right? Then you got to know how far to climb the hill first. So that's the number one thing. And people, I can do this. I just write letters and, no, that's what all those other credit repair monkeys do. That we haven't done that in 18 years, because it's just outdated. It doesn't work well. And when you write letters, the stuff comes back on the credit report, right? Stuff comes back. So it's a much better approach with using the forensic technology to do that. That way it's permanent, right?
Right.
So, and in surrendering, I guess the mistake is just surrendering to say, you know what, I'm a smart guy. I mean, I'm sure everybody listening here is really smart, right? But understanding you can't know everything, right? And just getting that education, and then learning how the system's really designed, how it works, and learning how the algorithms work. And then you're able to navigate through the minefield much more easily. And if you want to take that information, run and do it yourself, go for it.
Right.
I think I'd say that's the number one mistake.
All right.
Some people think they're too smart for their own britches,
Yeah, I mean, we can't all be all things to all people. We can't be good at everything. That's why that's why I hired somebody to finish my basement and put in my sprinklers, and that's why I don't do my own taxes, right? It's the same thing. We're all good at certain things, but there's areas we need help with, and this is definitely one of them. So,
and the other last one to wrap this up is that the ostrich with the head stuck in the sand. What I don't understand, I fear, and what I fear push away. We talked about that. And the natural human behavior that I've noticed with business owners and just consumers in general is that, when they're going through the fire, like we're all going through the fire right now, right? I don't need to tell you that. The natural condition is to freeze like a deer caught in headlights and just freeze, and have paralysis, right? That's the death kill shot right there.
Right.
So push through that fear, get that knowledge, and then you're like, darn. Have you ever did that before, Pat? Where you're like, man, I need to clean my garage, And it's sitting there for 3 years, and you finally do it. Like, man, it only took me 2 hours. What? Why didn't I do that? I would have felt better years ago, right? It's kind of like.
Well, you talked about fear, right? The biggest fear many of us have is the fear of the unknown, and
Yes.
it can be paralyzing, right?
Mm-hmm.
We do have another caller. I think we have time if we go fast.
Yes, I got 6 minutes
left. So, quick question, Brian, and we got to make a real quick response.
Yeah, Don, I just had a quick question. Do you advise people, number one, not to make sure they don't get subprime credit cards? Because I know that is looked frowned upon with the credit world. And then the other question is, do you advise them to separate their business credit from their personal credit so utilization stays low on your personal?
Brian, great question. You went right to the heart of it. So the old school thinking of that creditors look at like Capital One or these high interest rate credit cards is like, oh, stay away from the person just because they have that card. That died about 10 years ago. Now it's all score driven. That's number one. You got to crawl before you walk. So sometimes when a person comes in, they're like sub 500s. No A-paper credit card company is going to touch them for a long time. Remember how I just taught you a moment ago that you want to age those 3 credit cards at least a year or more, right? So my whole attitude is, look, if we're at a 500 score and we got to start building credit while we're cleaning, let's just go ahead and take that Capital One at 18% or whatever. And, First Premier, I hate them, but get what we can take to start building the algorithm, start building the score. And then once we've achieved a 740, then we'll train people to here's a link to go. It says, where to go get the best credit cards for travel, cash back, whatever. But we got to kind of crawl before we walk. That's the first. Did I answer that part of your question?
Yeah, you did.
Okay. And the other part of it, and the other part, the question you asked me, I think, Brian, was that, is there a difference between the keeping your debt separate from your business? So here's a nice nugget. Is that when we're doing advanced training, an advanced technique would be to have your 3 cards on your own personal file. Once we've hit 740 on the lender score, here's some business cards to go get. And the beauty of most business cards, Brian, which you may know this, is that they don't show on your personal credit file. Did you know that, Brian?
I do know that. I have business cards, and I do that for a reason.
Excellent. Yeah, you're right over the target. So, and so then you start utilizing your business cards and keeping your personal cards in the safe, like I said earlier, and just put $5 on them every 5 months to keep them alive so they don't go to sleep and drop your score. And then just start utilizing your business. So what I do is I have 2 business cards. I actually have 3. 2 I use for business, 1 I use for personal, and that way I keep all my debt load off my personal credit file, and it won't drop my credit score. Does it make sense?
Correct. Yep, I do that. I just looking.
Great question, Brian.
Going in the right direction. I appreciate it.
You're going in the right direction, brother.
Hey,
all right.
Good job.
Thanks for the questions, Brian.
Thank you, Brian.
We're out of time, guys, but as I said before, I introduced Don here on the show because he is the expert in this industry. He is widely respected and renowned as such. We have a special promotion. Don does his analysis, a $300 value. He's given us a $250 discount. Basically, for $50, you can have him do his full analysis, credit forensics, 3-hour overview, et cetera, et cetera. So what's the best way to get a hold of you, Don?
There should be a description and a link below for a Calendly link. Just click on that link down there and then schedule a 5-minute call with Grace. She's our assistant, and then she'll look at your calendar, look at our calendar, get it scheduled for you and something another, and then we'll sharpen iron together.
Fantastic. Anyone want to learn more about anything we've talked about? Schedule an appointment with Don or reach out to us. You can text the word certainty to 26786. Look in the description below. There's Don's link, our contact information, et cetera, et cetera. So we appreciate you being on the call, guys. Thanks for listening in. Don, thank you for being here. We definitely got to do it again. There's lots more to go into. This is just a glimpse, a snapshot at your 32 career and everything you've learned in the process. So thanks for being here. I know you're busy and you get invited to do this a lot. So thanks for gracing us with your presence.
Amen, brother. Thank you, Patrick. God bless you guys.
We wish you more certainty and all the help that can come from a better credit score. If you do need help, please reach out to Don and his team. Go get it. Certainty is out there for you. It's out there for the taking. Please don't forget to share this episode with others, post it on your social media and so forth. Get the word out. These are guests and tips that can definitely help. Don's a great example. So thanks. Have a great week, everybody. And thanks again for being here, Don.
Thanks for tuning into today's episode of Finding Certainty. We hope you've gained some more insight into how to create more certainty in your own business or nonprofit. Join us next week for another taste of the Certainty Experience. Until then, we wish you greater certainty in all that you do.